Welcome to this explainer. If you're targeting that A-star and IGCSE accounting 0452, well, you are in exactly the right place. Consider this session your elite masterclass. I'm your subject specialist, and today we're going way beyond basic textbook definitions. We're going to be looking at the true architecture of accounting.
And I am your senior examiner. I've spent years grading these exact papers, and I'm here to give you the insider perspective on exactly where those crucial marks are won and where they're lost.
Together, we're going to give you a high-energy, deep-dive mentoring session into the trial balance purpose and preparation module. Let's get right into it. To kick things off, consider a rhetorical question. What do modern AI-driven fintech tools, like Xero, and an A-star IGCSE accounting student actually have in common? It's a pretty fascinating connection. You see, neither of them just blindly logs numbers. They both translate raw data into high-level financial intelligence.
Precisely. When AI handles a trial balance in the real world, it's constantly cross-referencing duality, it's checking the business entity concept, and it's actively hunting for anomalies. And honestly, that is exactly the mindset I want to see on your exam script. You aren't just doing some basic record-keeping exercise here, you are literally stepping into the shoes of a financial analyst.
So, here is our roadmap for today's session. We'll start by building the trial balance bridge, then move straight into concepts and modern terminology. From there, we cover exactly how you go about securing the method marks. After that, we tackle the hardest part of the exam, AO3 interpretation and evaluation, followed by my personal examiner insights and pitfalls. And finally, we'll wrap the whole thing up with the A-star challenge. Okay, let's lay our foundation with our first core concept, the trial balance bridge. Okay, let's dive into this. The trial balance is not just a list of numbers. It is the fundamental bridge connecting everyday data entry to high-level financial intelligence. This module is literally the core architectural requirement for your entire syllabus. It demands that you deeply understand the duality of every single transaction. Every debit has a corresponding credit, and maintaining that accounting equation at all times during the fiscal period is absolute law.
I really cannot emphasize that enough. As an examiner, I see it all the time. If this fundamental bridge is shaky, every financial statement you build afterward, your income statements, your statements of financial position, they just completely collapse. And unfortunately, so does your grade.
Moving right along into our second section, let's talk about concepts and modern terminology, specifically the non-negotiable updates you simply must know for the current syllabus cycle. Listen up, because for the 2026 to 2030 syllabus updates, Cambridge has fully transitioned to modern international terminology. Terms like irrecoverable debts and owner's equity are now absolutely mandatory. Achieving 100% accuracy with these specific modern terms is a strict requirement for top marks. If you walk into that exam room and use older terminology from an outdated textbook, you are instantly signaling to the examiner that you just haven't studied the most current parameters. Exactly right. You have to completely abandon that outdated vocabulary. Relying on old textbook terms instantly flags you as unprepared. Instead, you've got to confidently deploy modern vocabulary like accrued, prepaid, realization, and consistency. But, beyond just memorizing definitions, the A-star student seamlessly applies these terms to the complex, multi-layered business scenarios presented in Paper 2. It's all about speaking the modern language of business fluently. And this actually brings us to a massive conceptual hurdle. Let me read you a direct warning from my own grading experience. Students often overstate profits by ignoring potential losses, which is a violation of the prudence principle. You must remember the historical cost principle and the prudence concept at all times.
Right, and think about the real-world implications of that. Transparency is vital. Interested external parties, like banks deciding on loans or tax authorities calculating liabilities, they rely on the absolute integrity of those records. Overstating profit isn't just bad math. It fundamentally distorts the entire evaluation of a business's health.
On to Section 3, Securing the Method Marks. Consider this your advanced technical methodology survival guide. So, the technical execution of the trial balance requires a strict, methodical flow. Step 1 is identifying the correct business document, like an invoice or a bank statement. Step 2 is recording this in the books of prime entry. Step 3 is transferring it accurately to the ledger. This rigid procedural logic is absolutely critical.
It's critical because of method marks. As an examiner, I want to reward your logic. Showing your workings is your ultimate insurance policy. Even if your final balance is completely wrong because of some silly calculator mistake under pressure, if I can see your logical, procedural flow clearly documented right there on the page, you will harvest those method marks.
Now, what's really interesting here is that a crucial part of those workings is the T account, which remains the absolute gold standard for representing the double entry system. Think of the T account like a highly sensitive balancing scale. You must master the art of clearly separating the balance brought down on one side from the balance carried down on the other. Misplace a single entry and you create a directional error that throws the whole scale off, completely derailing your trial balance. Speaking of derailment, let me flag exactly where I see students bleed points during this technical execution phase. The primary mathematical pitfalls I see constantly involve miscalculating the percentages in trade discounts versus cash discounts. Guys, they are treated entirely differently in the books. Another massive trap is ignoring state symbols when you're working with manufacturing accounts. To secure that A-star, your goal has to be absolute precision in the trial balance phase. That takes us perfectly into Section 4, AO3, Interpretation and Evaluation. We are now moving up Bloom's taxonomy to tackle the hardest analytical, practical, and investigative skills required in the course. Subject Specialist. Assessment Objective 3 is all about evaluation. Imagine calculating a current ratio that drops drastically from 2.5 to 1 all the way down to 1.1 to 1. Now, just plugging numbers into a formula to get that ratio, that's just a baseline skill. Identifying that this massive drop represents a business facing a sudden, severe liquidity crisis where they are struggling to cover short-term debts, now that is an A-star level insight. Exactly. So the crucial point is, the AO3 marks come from debating the precise chain reactions that cause that collapse. Why did it drop? Is it because the business overpurchased inventory that's now just sitting locked up in a warehouse? Or perhaps trade payables are being settled way too slowly and it's damaging critical supplier relationships? Right. Or maybe their cash reserves have been completely depleted by a sudden, massive capital expenditure. You must act like a financial detective here. Building out these cause and effect chains out loud on your exam paper is exactly how you secure those top marks. And, inter-firm comparison is another huge part of AO3 evaluation. Take depreciation, for example. Comparing a business that uses the straight-line method with one that uses the reducing balance method makes direct inter-firm comparisons incredibly difficult. As an A-star student, you need to look beyond the surface numbers and analyze the true quality of the profit. You must effortlessly bring in non-financial factors, stuff like staff morale, geographic location, market reputation. These are elements not captured in the trial balance, but they are absolutely vital for evaluating long-term sustainability. All right, Section 5, Examiner Insights and Pitfalls. These are rapid-fire warnings taken directly from my recent principal examiner reports to help refine your exam strategy. Let me share a factual observation straight from the 2024-2025 reports. Failure to distinguish between revenue and capital items. This is a classic trick question and a major pitfall every single year.
Ugh, and the catastrophic effect of this cannot be overstated. If you misclassify a capital expenditure, say buying a brand new delivery van, and record it as a revenue expenditure, like simple van repairs, you don't just get that one isolated question wrong, you ruin the balance of the entire trial balance, and you fundamentally distort the profit calculation for the entire fiscal year.
Here is another insight that just pains me to write in my reports. Marks lost through poor handwriting in ledger accounts. I literally cannot stress this enough. Your brilliant accounting logic, your perfect understanding of duality and the prudence concept, it means absolutely nothing if I literally cannot read your numbers. I know you're under time pressure, but legibility is a non-negotiable part of your exam technique. Help me give you the marks you actually deserve. When you're sitting in that exam hall and that intense pressure is on, you need a mental anchor. Here is your A-star memory hack. ALE. Assets equals liabilities plus equity. It's the most basic accounting equation out there, but you must ground yourself in it. If you're panicking during a complex multi-step adjustment, stop, breathe, and remember ALE. Every single transaction you are looking at must keep this equation perfectly balanced. Use it to double-check your logic right there on the fly. And finally, we arrive at Section 6, the A-star challenge. It's time to put all of this together and leave you with a high-level conceptual test to really prime your mind before you hit the books. Subject Specialist, here is your pause and think challenge. How does a single misclassified capital expenditure impact both your T account balancing and your final return on capital employed, your ROCE evaluation? Senior Examiner, I challenge you to trace that single error all the way from basic data entry through the trial balance right up to high-level business strategy. Mastering that chain of logic is exactly what separates a good student from an A-star student. Thank you so much for joining us for this explainer. Keep practicing your procedures, always show your workings, and happy studying.